And we're back. Hey, that was a nice holiday. Did you have a good weekend? Welcome to Monday morning. How you doing, everybody? I'm back for the final hour of trading. I figured, what the hey, with the Dow trying to push 800-point losses, might as well cover it with you and see what's going on. Yeah, a little bit of concern leaking into the economy. Remember, stocks trade today. The markets are anticipating the next 6 months to a year. So what the market is doing today is reflective of what people think is happening in the future economically. It's nothing personal. It's just whether unemployment is going to be worse, or whether it's going to be higher prices or inflation or economic activity, whatever, profits and losses. Markets sell now, buy now, sell now, get out now, get in now, based on how you feel things are going to be going forward. That's all it is. It isn't all that complicated. Well, today and yesterday, the market has had a sort of a reflective moment or two to sort of ask itself, well, what the hell's going on? And what's going to happen, and how bad will it be? I have a suspicion that if you're the leader of your country decides to, become an ally of Vladimir Putin, that might be upsetting a few people. Maybe not in the United States directly. You never know. I mean, I'm sure there are Americans going, "What the hell's going on?" But it's the outside of America view that you have to think about as well, because of course the markets, the American markets, are the most followed stock markets in the world, and Asia investors, European investors, Mideast, anywhere, I mean everywhere, follow and invest in the American markets, the most liquid markets in the world, and kind of a market you can trust, because generally speaking, you can't really pull a fast one through fancy auditing tricks. Eventually you get found out. You don't really want to do that. The problem right now, though, is with the SEC in the hands of the new administration, the question now will be, well, how much can you trust the enforcement of SEC rules regarding potential questionable trading scenarios going forward the next 4 years? Under the last president, there really wasn't any issue about whether the SEC had teeth. It had teeth. It had power. Right now, going forward, there are some folks going, the SEC might be a bit loosey-goosey, which could allow a few cracks to appear, and a couple of slippery individuals might be able to pull a couple of deals through. I don't know, they say. Well, again, that it's in itself isn't enough to drop a market. But what is enough to drop a market is if investors feel that they're getting a raw deal, or they are having trouble trusting the potential earnings power of certain companies, or certain stocks, like a lot of stocks, are way overpriced, and there is no way with a Trump tariff war about to break out globally, what companies can steer around that without being affected? And consumers, of course, are asking themselves, why is it that a dozen eggs at a Walmart store in the United States cost as much as $7 a dozen, $8 a dozen? Why is that? Why is it that at Costco, when people go in, they're limited to buying 3 packages of eggs at a time and no more? And husbands and wives are going into Costco and they're each buying 3 dozen or 3 packages of eggs, going to the parking lot, putting the eggs in the trunk of their car, turning around and coming back in and doing it again, and hoarding eggs. You think they're going to $2 a piece or something? Like what? You got to wonder if, when that is going on, price gouging and or supply issues, or the potential of higher tariffs, the fact that a car, SUV or a truck might go up as much as $3,000 in costs in the next 90 days, you've got people going, whoa, cash is king. I think I'll hold my money closer to my chest and my vest, and I'm not going to go out there and willy-nilly throw money around unless I can hoard something that I can use, like eggs, maybe. I don't know. Welcome to the party, pal. Look, around here on this old man's channel, what have I been telling my viewers to do? Dump your stock and write cash secured puts. Sit on cash and other people's cash on top of that. That is the simple way to not worry about a 700-point drop in the market. Offer to buy back stock that you love at a much lower price than it's trading at, and it's okay. Even if you get exercised, it's okay. If someone makes you buy stock that you wrote a cash secured put on, you'll happily buy the stock back at the discount you're going to get, and you're going to turn around and sell it immediately and write another batch of cash secured puts, going right back into cash and adding the cash secured put cash on top of that and hauling in interest on your money. Because right now, it looks to me like interest rates over the year, all of 2025, aren't going much lower than where we are. And they might even go higher by the end of the year if there is an inflation problem with regard to tariffs. And that means you can get even more money for your money as an interest rate collector. And I invite you to look at all the S&P 500 stocks out there and find good old-fashioned listed public companies that will pay you anywhere from 5 to 8% dividend yields. You're not going to find very many. IBM will give you 2.5% right now. Walmart will give you 1% right now. Cornerstones of the investment world. You're not getting any money from those guys. They're buying their stock back. They're going to let the market dip, and they're going to buy up their own shares and tighten up how many shares are out there, hoping that their timing is okay and that their earnings will be good enough with fewer shares outstanding that they can report to the world, we're making just as much money as last year. That's the strategy in corporate America. Understand, folks, most public companies trading today are not out there in control, being controlled by the founders of these companies. Most public companies today are being managed by management teams hired by the boards of directors. These management teams have no interest in the long-term history of the company per se. Their focus is a blinder focus like this. They're being told by the directors, make money this quarter, make the market love our stock so our stock goes up in price. Institute a buyback program, bring out whatever kind of announcements, and get the market up, because your compensation is tied directly into the stock options you're being granted by the board of directors. These folks don't own 20% of the company going into the job. They own nothing. And when they leave the job after 5 years, 10 years, however long they succeed, they won't even own a percentage point of the company. They own 1/10 of 1%, if that, because they're flipping their stock out as quick as they can. There's the difference between a good year and a bad year. If you can buy stock from the treasury at $50 a share and dump it into the market at $70 a share, you made $20 a share on 1 million shares. There's a $20 million payday. Who cares how the company does after you sell, after you quit, after you get fired? You've made your money, you're moving on. There's another guy or gal taking over your chair, and they're in the same boat. They don't own any stock, and they only get they only get options on the stock at the prices the stocks are trading at when they got there. And so right now, with markets going down, there's a whole bunch of board of directors, a whole bunch of CEOs, CFOs, COOs, and all the assistants and secondary level and third level of senior VPs. All of their stock options are evaporating in front of their eyes right now, because some stocks are down today. And if we go into a correction of a 12% move, a 15% down move over the next month or two, it doesn't have to be sudden and brutal. It can be just a slow, steady slide. Every one of these management groups out there will be underwater on their options. And so they're working just for salary, and they could be fired at any time for not performing up to the standards that they were hired for. And so what's the loyalty of management? What can I say? There are some stocks that will do well. Some shares will do very well no matter what the sentiment is out there, what the perception of the market is, because they are delivering or helping the company deliver good numbers. Sure. SoFi is one of them. SoFi will do very well corporately. How the stock will react is up to the market, but the company will give shareholders every reason to feel good about owning shares of SoFi and holding it for the longer run. No doubt in my mind. There are others, of course, and then there are some stocks who are represented. They represent very good companies, very large, multi-trillion-dollar companies. Unfortunately, these are shares that are way overpriced already, and we're at record highs in the market up until a couple of days ago. These stocks could not hold these prices. They are beyond perfection. They were priced beyond that. And so when Wall Street says to you, well, we'll just let these companies grow their earnings into their stock price, that is a red flag going up. Surrender. It's over. White flag, really. It's game over. You're not going to last very long with that kind of mentality in Wall Street. That's where people quietly sell. They tell you how much they love it, and they slowly are dumping the stock. Get out. Anyway, there it is. We're down 720 on the Dow. We were down 800 a few minutes ago. 1.6% drop in the Dow Jones right now. We're down about 100 points on S&P. That's 1.6%. NASDAQ down 420 points, 2.1%. It is the weakest of the three indexes. When earlier this morning, the Dow was the weakest and the NASDAQ was actually positive to start the day. That really didn't last long. Oil is down $2.24 a barrel at 70.33, and this is a tip-off as to how the markets are going to do. If oil continues to slip and slip and slip and slip, that means there's a lot of oil sloshing around with not enough buyers. It only has to be 1 million barrels a day of differential. The world uses 100 million barrels a day of this stuff. 1 million barrel slippage in demand causes an oversupply problem. 30 million barrel a month increased oversupply problem. This in a year is 365 million barrels with nowhere to go. This is bad news. That brings the oil price lower. And if oil is literally not being used up as it is being produced, that is because oil producers are misestimating the quantity needed for the economy. And if the economy as a whole around the planet backs off 1 or 2 million barrels a day of demand, that's a sign that economic activity is slowing down. And now we're going to start to find who the winners are and who the losers are in the economy. The cracks will begin to appear. That's all. This is all basic 101 stock market info that should be taught in schools. It isn't, but it should be taught in schools, just so you have a handle on why is the market doing what it's doing. Today, we could just say there's more sellers than buyers. Well, Dow lost 450 yesterday. It's down 750 now. So we're down 1,200 points in 24 hours. And yeah, there's quite a few more sellers in a hurry to get out versus buyers in a hurry to get in. There's buyers, but at lower prices, not at current prices. And so we're backing off. Welcome to the party, pal. If you are here as a follower of this channel, you're an option writer. And if you're an option writer, you're one of the few that will be winners. And congratulations, you've taken my classes, I hope. You're taking them right now, I hope. You're rewatching them to refamiliarize yourself with the options market, the psychology of this business. And you have figured out that right now you want to be a call credit spread writer. You want to be a cash secured put writer rather than a shareholder. You want to be heavy in cash in your account and use the cash to write options and say, thank you, sir, may I have another? You're writing calls if you own stock, and you're buying calls back as they back off to write lower strike calls or further out in time calls to take even more money off of this market right now. This is your job. This is what you're supposed to be doing. You're not supposed to be sitting there going, oh, I just love it that I sold these calls for $3 each and they're down to 30 cents. And if I wait 3 more weeks, they're going to go to nothing. That's not what you're supposed to be doing. If they're down to 30 cents, they're down to 10 cents on the dollar. This is the day to buy them back immediately and write a new set of calls, good for a further amount of time at a different strike, and bring in another $3 a contract. Now is the time to bring thousands of dollars into your account to add to your cash balance and allow daily interest to form on top of the larger cash balances. It's called getting richer. It's a term that some of you are not familiar with because you're not used to winning. I understand. It's okay. I'm not mad. Just here to try to help you out, figure out this is the time to take the dough. Wing Commander, hello there. Splair is here. Welcome. Fun. Thanks for the afternoon show. We need it. Brian, I have been slowly buying shares, averaging down. My cash secured puts are all blood red, though. Ouch. Brian, covered calls are happy, though. I just don't have any at the moment. Dying, SoFi 1450, lost $2 in 2 days. Deep value options number 15, Rugman equals Trump. Go, baby. Global traders sell puts during the crash. Right now, it's time to write cash secured puts. Richard Carlin, number 16. 37, Rocco. Private equity is the modern day Scrooge. Or Scourge. Okay. Number 17, thumbs up. Thank you, everybody. Brian, I've been averaging down on my sound shares. I was at 1451 2 weeks ago. Now I'm at 1262. Any type of pop recovery, I am selling at the money covered calls. I'm having fun with this. The White Fox covered call printing right now. Rocket Lab 1. Team crossed hands, everybody. Brian, just to confirm, Uncle Bruce, if we're assigned shares from our cash secured puts, you think we just sell the shares right away and sell cash secured puts again? Yes. Why not sell covered calls on the shares at the money? Just curious, because if you are taking the cash, you're selling off the stock right away, you've got the cash, you're now able to write cash secured puts to restore your cash balance where it was. And in that sale of those cash secured puts should be a premium over and above any book value you're selling that will compensate you and let you win if you get exercised immediately again. That's the name of the game. Stay in cash. Let the markets move. Stay in cash. Have a great weekend from Splair 1. My powder has been used. Beach Boy, Reuters, Google to be hit with EU charges of breaching big tech rules. Mark C, what a day. All my covered calls are now out of the money. They're all out of the money. Mr. Premium, happy Friday. Time to fill our pockets. There you go. Dude, options shrink. No problems at all. Exactly right. As far as writing calls on a falling market, if you want to play the wheel strategy, you've been exercised, you made to buy stock, you now want to write calls. I hear you. I understand what you're saying, but if you stay with the same program by writing cash secured puts yet again, you're sitting there going, look, I held these shares that were trading here, I sold them. I wrote cash secured puts to bring in a bunch of dough to buy the stock back down here. The stock has come down. I was exercised, but my exercise price is lower than what the stock is trading at because when I wrote these puts, they were with a premium. But nonetheless, I now am long stock again. I'm going to write another batch of cash secured puts to bring in more cash with a premium over and above book value so that if the shares actually start to rise, they bounce back to where they were yesterday, last week. The puts I just wrote are shrinking. And now I'm in a position to buy those puts back and roll them to higher strike puts to win. If I write call options instead, the problem is, here's the problem. You are made to buy the stock. You write call options that are right around the market, and the stock starts to rise with a rebound, your calls are worth more money than you got for them. You now have to do a rollover on the calls. And if the shares go up too far, too fast, too quickly, you might get exercised on the lower price that you locked yourself in on. With cash secured puts, it doesn't matter how high the stock goes. Your puts will collapse in value. You'll roll them for higher strikes, bringing in money as the stock recovers. I don't know where the low is. Is this a 2-day sell-off? Is this the beginning of a 4-day sell-off? I don't know. But if you're exercised, you are forced to act. And if you are forced to act, I recommend sell the stock, write cash secured puts, and earn money on the recovery. That's it. There it is. Happy times. A Savage of Wall Street got 200 put shares of Sava 2026 cash secured puts. I got put 200 shares of Sava. Someone got something called, I had intrinsic and extrinsic value on them, sold Unity 26s, 27s for 3+, and I'm buying all of my cash secured puts back, is what I'm thinking he's saying. Boeing Tiger options, X equals wild moves. Mr. Premium, we write in the monies if we're expecting pullback. Dude, not surprisingly, Boeing, Brian, I like that at the money covered call option. And dude, rather not surprising that it's the third Friday of the month. Volatility today. That's what I talked about this morning on my morning show, 8:30 Eastern every day. Volatility on the third Friday of every month, of course. Every Friday is option expiry day, and there's a whole bunch of volatility out there. The Dow is slipping a little more, back to 76, down 761. S&P now down 102, and NASDAQ down 424 or so. There is the story at the moment on this market, kids. That's what I see going on here. Never a dull moment in the market. Super microcomputer today is at 56.23. Make it 55.85, and it's down 304 today. High today was $62.43, and here we are, almost $7 lower on the session. There you go. This is volatility. Walmart's continues to slump, apparently, even though Wall Street is saying buy the dip, buy the dip. Some Wall Street people are saying this is a tremendous opportunity to buy a company on sale. I'm thinking, no, it's not. You buy this thing, you're going to get a barely a 1% yield on your dividend. There's nothing there. They're trading at 40 times earnings. It's double what it should be. The stock should be $47 a share. It's 94. It's double overpriced. Why would I go crazy and buy a company that has already admitted their next quarter will be lower than originally estimated? I think we're going lower. I don't see an economic rebound to make more shoppers show up at Walmart. Walmart isn't going to have 5 million new shoppers show up out of nowhere. Everybody shops at Walmart. And so the cutbacks are on. I'm doing what I can. Let's see. Savage. Uncle Bruce, after balancing the numbers of cash secured put money taken off the table and writing several cash secured puts today on Sound AI, BBAI, Redfin, Riot, Open, Archer, and I made over 10 grand in premiums on 3 portfolios today. Wow. There you go. ES, I haven't seen this channel in 2 years. I think you were suppressed. This video popped up first. Hope all is well. I've been here the whole time, always here. And I don't live off of advertising from YouTube, believe me. I don't have that viewership, but my members keep me on the air, and I thank the members for hanging around and learning how to write options and make money in this market. We're down 774 on the Dow. BP, so Uncle Bruce, if you've got SoFi, cash you could put Jan 26s, and say they end at $14.50, the shares, and you're exercised, what cash you could puts do you suggest buying? No, I'm not saying buying. Writing BP, which ones would you write next is the question. Now, you could write January 17s if you want to, a little closer into the market with a premium on it. Check the option chain and see if it's worth your while. Or you could turn around and write Jan 26 20s again. Because the likelihood is if the stock is trading at $14.50, which puts those $20 puts at a book value of $5.50, there'll be a premium on top of that. Can you get close to $7 right now on your SoFi contracts? There's the question. Because if you could get $7 for those contracts, you're offering to buy SoFi back at $13. Hey, stock's at 14 and you're bought in at 13. Are you a happy camper? You should be. The market is 675 to 690 last I see, and I'm a few minutes behind. I'm 10 minutes late. So they've moved up today by about 60 cents or so. The 17s are roughly 465, 470 kind of. So if you could get 470 for a $17 put contract, you would be now exercised at 12.30. Is that right? Take 5 off. Yeah, it would cost you 12.30 to buy back the SoFi shares net to you. Are you okay with that? Can you live with yourself knowing that you're on the hook for $12.30 because you've been given 470 up front on a 17? The stock goes up to $16 next week. Your 17s have a $1 book value. You sold them for 470 and they're worth $1 book value. They're not going to be trading at 470. The stock goes to 16. Back they go. That's why you want to be writing cash secured puts. Bring in the volatility on a monthly options market. Makers and casinos operators are very happy here. Dude, glad I added some out of the money call spreads this morning like you suggested. Call credit spreads are where you want to be on almost everything except GameStop. That's where you want to be. All the Magnificent Sevens, you want to be doing call credit spreads. Glad I did some of those. Savage of Wall Street, I think someone got margin called and I'm loving it. Cash is king and I'm selling cash secured puts. This is a beautiful thing. Worst case scenario, I buy all these companies at around 15% less than they are today. Is this great? Yes, it is. Dude, BPCY, you are excited. You just sell the shares and write again. Of course, you could wheel if you prefer. Dude, I would do some strike, same expiring myself. Writing, you are correct versus writing. Savage Wall Street, all I have to say is buy the damn classes, kids. Imagine selling cover calls on stock you bought for cheap and turning around and sold for 20% more. And then you got premium on top of that. It starts with class number 1. Thank you, my friend, for the plug. BP, $20 Jan 20s are 670, 685 currently right now. Good times with Gila. Uncle Bruce, investments in a 401k can only write covered calls. So you continue to suggest cash secured puts. For those of us who cannot, are covered calls a bad idea in this market? I always say, if you're talking about accounts, like in Canada, RRSPs, in the USA, in some cases, these 401ks, you are limited to what you can do with the options market. You can buy calls, you can sell calls, or buy calls, buy puts, and you can write calls, certainly. If you're into stock that you have a long-term want to be in, like you own Apple, you own NVIDIA, you own Rocket Lab, you own AI, you own SoFi, you want to be involved in companies that you're convinced and are growing, and are going to become larger. And it's a 5-10 year horizon, say, write covered calls. Absolutely write covered calls. Now, if you've written covered calls in the last 3 months and the shares have kept going higher and higher, but now they're backing off, you might find that some of the covered calls that you wrote 2 weeks ago, a month ago or so, they might be depreciating dramatically right now from where they were 2 days ago, where they are now, and where you wrote them at. And you can just continue to fold your arms and say, keep coming down to me, because the clock is my absolute kryptonite here. I'm going to win. The contracts will only be worth their book value when they expire. That's all they've got in them. So I know I'm going to win on my trade. On the other hand, if you've written calls in the last few days and they have shrunk nicely on you, today might be the day where you buy them back and you turn around and write another call, slightly lower strike price, maybe further out in time to take a bigger time premium off the table over and above the book value that you're offering. There you go. This is smart management. Hot Wing Mike, damn Savage used today's premiums to buy a big box of wings for the family this weekend. Clay, buy SoFi today. When do you estimate a recovery from today's sell-off? I don't know. I have no idea. But the lower they go, the better price they are. And, today's day is not going to stop SoFi from reaching 11 or 12 or 13 million members. It's not going to stop SoFi from bringing in more revenue, more deposits, and lending out more money. So they're getting richer. Anytime you're ready. Savage of Wall Street, I just sold 2 more $3 cash secured puts expiring March 21 for 31 cents. That's more than 10% in a month. I would love to buy Lucid for 270. I dare them to put these shares to me. Come on. BP, thanks Uncle B for the advice. Luann says, Clay, write cash secured puts and collect premium and interest. Dude, I'm in the same boat, Gila. Just sell cover calls. I have brought in 8 to 10% a month selling weekly calls on my stock, just selling at the money or out of the money, depending on the market. I build cash and I use it to roll up and out. There you go. Savage of Wall Street, Uncle Bruce, I just can't stop myself. That's free money up there and them there hills. People are so scared. I go feasting on days like these. Stop trying to guess the market. Just take the money. Make the money. Take the money. Dude, I'm very happy with my returns in this market. Just selling calls. Cash secured puts are great too, though. Absolutely. Again, I mentioned to all of you out there, none of you are the same. Every one of you watching me, you're all different ages, different demographics, different physical locations, different kinds of accounts, different kinds of tolerances for the market that you're comfortable with. Some of you need action. Some of you despise action. You're all over the place. The good news about the option market, it'll go any way you want to go. You're a casino. You can operate and offer a slot machine that's loosey-goosey or as tight as can be, and you can set the parameters around every contract you create. Option writers are in charge. Option writers set the odds. Become a casino and learn how to take money from these crazy gamblers. I mean, even with the market as down as it is, there are gamblers trying to find the right contract at the right price. They're all trying to fish for the bottom right now. There's bottom fishers everywhere thinking that they're smarter than everybody else. They're going to catch the bottom and catch the bottom. They don't think that maybe Monday morning we could be down 500 points to start the day. They hope that it's just a straight 500-point run and it'll stay there. And maybe the first hour on Monday is a bounce back, dead cat bounce hour, 200-300 point gain. And then by Monday afternoon, we're down 800 again. I don't know. As a writer, you don't have to care. You just take the premiums from these people and deal with the fallout later. Time is your friend. These folks are in trouble out there. What can I say? Thank you so very much. Let's see. Dude, amazing that some haven't sold off even more. Charlie, oof, what a day. Hey, everybody. Hello. Welcome all to the program. It's the final hour of trading here on a Friday afternoon. It's February the 21st, Friday, Feb 21, 2025. The Dow's off 770 odd points near the low of the session. S&P down 102, 103, and NASDAQ now 427 lower. There are margin calls going out. There, of course, whenever you have all-time record high markets like we had earlier this week, that means a whole bunch of people are leveraged to the nines with margin because they are being offered the opportunity to borrow more against their rising portfolio, and they do because they think it'll never end. And now the first wave of sellouts are the absolute top enders who are as greedy as it gets, and they're going to get slaughtered. The next wave are the folks behind them who are thinking, oh, well, I'll go 80% on my margin account. I won't go 99%. And then they get caught out of like nowhere. And then you get people in the 60 and 50% range who start to sell now without getting a margin call. They don't want to get a margin call. They prevent sell first to back off. This adds to the downside, and it takes days to clear out, not minutes. It takes days. So we could be going lower for a while. I don't know. The market is going to keep telling us what it wants to do. And right now, call credit spreads on the big ones are where you can make easy money. 1 week, 2 week contracts. There's opportunity here. Anyway, John T., my goal is just 1% a week, and I'm easily above 1.6% a week for the past 15 weeks, all doing cash secured puts. This is bizarre. This is absolutely bizarre. Savage Wall Street, Uncle Bruce, this morning, I wrote some Unity $26 and $27 covered calls that I wrote yesterday. They expire March 21 for $3 plus, and I rolled those today to the 30s in January, and I took in 260 in premiums. I mean, good move or what? This is crazy. What sets this channel aside from others? Other channels are in absolute fear right now, telling people to sell and average down. Here we are, happy as can be, making money on the green and on red days. That's what option writers do. Casinos make money when gamblers gamble. And right now, gamblers are gambling. They're pushing the market lower, whether they like it or not. It's going lower. And gamblers are gambling at every roll of the dice, every spin of the wheel. They're playing it. And you guys are the casinos taking dollars from the saps. And you've got to do that. That's your job. That's what you're here for. You want to quit your day job and be an asset manager? Today, you manage assets. And it's called managing cash. From a cash secured put side of things, my goodness, this is it. If you have the opportunity to add thousands of dollars to your account today that you're going to start pulling in more daily interest on, that is your job. You've got to get paid from several angles at the same time. And interest is a powerful tool that can pay a lot of little old bills lying around. Nothing wrong with that whatsoever. Welcome all to the program. Thank you for being here. Sure. And can you imagine how many stocks are going to the moon channels are not having a good day today? They didn't have a good day yesterday either. It's been a bad end of the week. And their favorite guy is in the White House, and nothing good is happening the last 48 hours, no matter what he's signing. It's not working. The thing is, markets go up when more people feel good about the future than feel bad. Markets go down when more people fear the future and fear policies than not. And right now, more people are upset than happy. And so, yep, the diehards are happy that he's there, but the rest of the market, the majority of the market's going, we're not so sure about this. I don't know if I want to be exposed to this market at these prices. I don't know if holding Apple stock closer to a 40 PE versus a 30 PE is in my best interests. Should I be sitting on PE multiples on Tesla right now at 336 a share? Should I be holding a 163 PE multiple Tesla stock right now? I don't know if that's in my best interests at this time. Palantir at 101 a share is trading at 535 times earnings. What about, I don't know. How about, let's say, Google at 181 a share, 2259 times earnings? That's a lot more reasonable than any of these other stocks. It's still down $5 a share, by the way. Apple right now down 2 cents, trading at 39 times earnings. Microsoft, $408 a share, 408.62, PE multiple 33. Is that too high? Historically, that is high. Got to make you wonder, when is it time to get out? Netflix at $1,006, trading at 50 times earnings. It shouldn't even be at 25. What are people doing? Why do you want to pay $1,000 a share for a stock that shouldn't even be at 500? Optimism about the future and whatever. Oh, great. You don't think there's maybe some competition coming? Maybe Hulu or Disney announces a $2 a month drop in the price of their services on a sale, and they take away 5% of Netflix's business. Do you think that could ever happen? A discount? A price war? Some people don't think so. They just think streaming is always going to make money. Oh, I can always raise my prices. Really? You think they're immune from the market forces? That's amazing. Meta, Facebook, $683.83 a share, trading at 28.68. That's a lot more reasonable than Apple. A lot more reasonable than Tesla. Got to make you wonder. Amazon, $216 a share, 39 times earnings. So that's double what it should be. 20 to 25 should be Amazon. Why would a package distributor be trading at 40 times earnings? I know they have other businesses. I know. But really, not 40 times PE multiple. Sorry, no can do. Just saying. I'm just a guy in front of a computer trying to help you analyze what the heck is happening out there and figure out maybe certain things are not what they seem to be. Savage Wall Street, stop being a gambler, start being the casino, and take money from dummies who buy hopes and dreams. Today, I'm taking the family out to dinner courtesy of the poor saps Uncle Bruce talks about. Yeah, we gotta love that. The man, BBAI, $6 for 75-cent premium expiring March 21. Thanks for the 11% return. You got to be savage. You just got to be savage. You got to do it. Savage of Wall Street, Uncle Bruce, real story. We just paid off my wife's last year in business school. with cash secured puts and covered call premiums. This is unreal. MBA, courtesy of the gamblers. Is this how it's done, Uncle Bruce? All I have to say is thank you. I suspect, my friend, that your wife, studying for that MBA in business, did not learn a damn thing about option writing in all of those classes. And I'll bet you, my friend, that there are millions of students in colleges across the United States, Canada, and elsewhere, they don't learn anything about how option writing actually works. They don't do it. I bet you that in the dorms in many universities in the United States, there are students gambling with student debt money, buying and selling call and put options. They are the saps, trying to find the big home run ball that's going to make them millionaires. None of them are writers. They don't know anything about writing. They're certainly not learning it from their profs. They're learning it from themselves. Unless they're watching this show, maybe. I don't know. Mr. Premium, stinker just triggered on Rocket Lab. Last month, I sold 2 cash secured puts. 23 strike, expired today. I got $2.49 for each of them. I just bought them back for a penny. Giddy up. Time to write some more. Dude, Savage, that is epic. Wow, way to go, paying off the NBA. Barry, what about GameStop? What would you hold? What would you do? I would sell GameStop and write cash secured puts. I would sell the 26, 24 and write 25s to 30s easily, cash secured puts, and take the premium right now. I would take that cash, add it on to your balance. That's what I'd be doing. Use the cash you get for the premiums to do some credit spread writing, call credit spreads, and enhance your revenues on other stocks. That's what I'd be doing. Easy peasy, nice and easy. The stock's down 83 cents. It's not like GameStop's in big trouble today, but those puts went up. You're getting more money for them. I would do that. Go all the way to January 26. Take premiums like dollars and dollars of this stuff. Snow Moon the Savage. You can now ask your wife something. I'm not sure what's going on here. The man, Barry, just sell cover calls way out of the money. Enjoy free money. That's advice to Barry. I can still get $75 per contract for a $30 covered call expiring March 21 on GameStop, 1 month. Savage of Wall Street. My wife is laughing. I just asked her, did you? And she said, hell no, I didn't learn anything about option writing in my MBA program. In my business degree program, they didn't tell me anything about writing options. I'm coming out of there with a debt, and now I'm supposed to get a job as an MBA, a business MBA graduate. Welcome to the party, pal. This is good stuff. Welcome everyone to the channel where you can make money on down markets. Easy money on down days like this. Oh my God, are they handing you opportunities to make profits? Learn how to write options. Go to my website, stockmarkerswithbruce.ca. It's right there. It's right there. A class, $200. There's 18 of them. Learn how to write options. Start with lesson number 1. Go into lesson number 2. Open up a practice account. Practice trading option writing. Free, risk-free, learn, earn while you learn. Start writing options after the 2nd, 3rd, 4th, 5th class. Start writing options already. You'll start bringing in money while you're taking the classes. By the time you finish the 18th class, I'm pretty dang sure you've made more than $3,600 from option premiums to pay for all the classes. That happens around here all the time. But, you know, there's only 162 people here. So, there are millions of investors who are like this right now, chewing their fingernails. There are probably hundreds of thousands that are on the edge of margin accounts, worrying about getting sold out. Have no idea what you guys do and how easily you take money from them. It's unbelievable. They willingly give you money from ignorance, complete, unaware ignorance. Ignorance is bliss. It's unbelievable. What can I say? I don't know. I'm the man. When my MPW calls get called away today, I'll have another 1,200 or 2 more $6 BBIA AI cash good puts for 75 bucks each. Thanks, and thanks for another 11% return. Luca Buongiorno. It's 7:30 a.m. here in, I think, Sydney, Australia. Welcome, sir. Savage at Wall Street, Redfin, $8 cash secured puts, March 21 for 95 cents right now. Laughing out loud. The man, every day I write options, I have to reassure myself that I am not breaking any laws and it's 100% legal. I have to keep reminding myself this is okay, because what you're doing is what the big institutional traders do all the time. The one thing you might notice that if the markets go down lots of points and lots of points and lots of points. Up in the sky, private jets are still flying. They're still going from point A to point B, and people in them are enjoying the lap of luxury because they're the writers of options. This is what I'm getting you to do in your own unique way. 1 or 2 here, 4 or 5 there, 8 or 10 there, 20, 30 over there. Take the money from the saps. Oh my gosh. Luca, yes, Sydney, Melbourne tomorrow, buddy. Right on, pal. That is so awesome. David, SoFi Jan 20 cash secured puts have risen by 54 cents alone today. Stock is down 84 cents. These cash secured puts are rising in value, giving you more premium if you write them. Giddy on up. Easy peasy. Take it all the way. All right. What can I say? We're down 714 on the Dow. We got half an hour to go. We're down 97.95 on S&P. NASDAQ down 400. A lot of damage has been done today to a lot of gamblers who were hoping that to buy today, a lot of stocks would have been a lot higher this week so that all those election promises of greatness would have come through this week and they would have cashed in on all those calls that they were buying all last month and the month before and all 2 weeks ago. They were all hyped up on another great week of executive orders being signed and the markets are going to love this. Well, we're 1,200 points away from anything like that on the Dow alone in just 48 hours. Not doing too well. So the writers are the ones going, I can't believe they hand me all this money. I just can't believe I get this kind of premium for writing these contracts. I'll take it. It's okay. Hand me the cash. Oh, and I'll take interest on the money in the meantime as well. I'll pick up some ETFs, either that mirror the treasury yields, or I'll pick up ETFs that pay the kind of interest that corporate bonds are paying. And that's where you're getting 7 or 8% on your money payable every month. There's nothing wrong with that action. Nothing whatsoever. Giddy up. Savage Wall Street, GameStop, $25 cash secured puts expiring Jan 26 are $650 right now. $650 for the 25s. Free money. I have enough GameStop, but one of y'all can take the candy from these babies. Unbelievable. You sell the stock at $26.18. You turn around and write a $25 cash secured put, which means you need $2,500 out of the $2,600 you just got. They hand you $650 in cash to please buy my GameStop from me until Jan 26 at $25 less the $650. So you're actually you're offering to pay $18.50 a share for GameStop. Are you comfortable being told that you have to buy possibly GameStop for $18.50 a share? How's $650 upfront? Take that as a percentage against your $25 contract. $2,500 is what you put up to get $650 in. A quarter of your money. I mean, what? What? This is insane. This is juicy as it gets, baby. Now you're sitting on $2,500 plus $650. You have $3,150 for 100 shares. You sell them right now for $26 and you replace that with $3,150. Do you get it? Is it sinking in? You still have 117 left over from selling the stock, by the way, and only writing the $25 put. You really have $3,300 in your pocket. That's $33 a share right now for your GameStop by offering to write a cash secured put. And if the shares go to 30 or 32 or 33, your put is worthless as it is now, and it'll go down to about $2. You'll buy those back and you'll write 30 or 33s or 35s, and you'll take in $6, $7, $8 more money. What? Take the money and run. They're handing it to you on a silver platter. I have classes that explain all this, but you've got to want it bad enough to do it. I'm just saying, it's just available for you. This is kind of fun. FS, Uncle Bruce, back in November, I sold a 17th of April 20 strike call option, 20 strike call option a while ago for $560. What should I do with this option? So you sold a 17th April $20 strike On what stock? It would help if you filled me in. Is this on SoFi? Is this on, what is it? You sold a $20 strike call a while ago, and I got $560 for it. Rocket Lab, thank you. Thank you. That helps. Okay, so the stock's 23.67. Sorry, Rocket Lab, Bruce. I'm sorry I didn't tell you the name of the stock. Okay, so you sold a 20. You sold a $20 call. Is that what you did? You sold a call, a $20 call, and the stock is now at $23.69. You got $560 for. So I don't know, what's it trading at right now? Is it trading at that price, or has it gone lower? Are you up on this trade right now? What should you do? How should you do it? Well, you have several choices. You could buy that call back and write a new call that expires June or July or August or September. Maybe you can write a 25 and probably get more money than this one will cost you, I hope. Or you could just buy this one back, sell your stock, and write a $25 cash secured put or a $22.50 cash secured put on the stock for January 26, and you'll probably bring in a ton of money, more than it'll cost you to buy back your call. And you'll take your $23.65 and maybe add $4 or $5 to that, and you've got a $27, $28 position. Stock pops back to $26 next week. You'll buy that put back for a couple of bucks less and write a higher strike put and take in more. I mean, you can play. You just flip the field over. Taylor, GameStop is considering consolidating into a wedge and will break out next week. Cash secured puts will lose, says Taylor. Tom, 25 minutes on the exercise bike watching Uncle Bruce. Lasagna almost ready. What a time to be alive. Deep value, $19.99 donation for you and Auntie Jen. Thank you, Uncle Bruce. This is a little bit of Philippe's money in downtown LA, and the Donut Man in Glendora. We're going there tomorrow for those two pop spots to have some decadent food. I'm going to celebrate your success, everybody. Thank you for that donation. Savage, Uncle Bruce, I think it's hilarious how many brokerage, how my brokerage does numbers. They keep saying I am negative and realize losses, but the portfolio has doubled in size and shares. Laugh out loud. I just chuckle and keep selling cash secured puts. John B., I wrote 26.5 on Rocket Lab early this week for today. I'll be getting assigned. I refuse to buy them back at this price. Even if I rolled for a similar strike, I'd be breaking even. I'll just write calls. Interesting. The man, the Savage of Wall Street. I should say, I should, my brother, my account. I should show my brother my account. I'm not sure. And he was like, what do you mean you are making money? It says you're down. I just laughed and sent him a link to the channel. John B., my strategy is if I get assigned on anything, I write calls for a week or two, grab what I lost in premium to sell the stock and do cash secured puts again. Always ways to play this game. Louis, I sold March 28th SoFi 17 cash secured puts earlier this morning, and I got 210. They're giving you 259 right now. Savage of Wall Street, I keep selling cash secured puts for $2 to $3 or more and have started buying them for a penny. I don't see anything wrong with that. Also keep selling covered calls, 2 to 3 strike zones from where it is and making 20% or more. There's all kinds of strategies here. Like I said, every one of you is different. None of you are the same. You're older, younger, richer, poorer, larger, smaller in account size. You have tolerance for action, no action. You're conservative. You're aggressive. You're in RRSPs, 401ks, IRAs. You're in margin accounts. You're everywhere. You're all over the map. And you're in England. You're in Germany. You're in the Netherlands. You're in Canada. You're in the USA. You're in Asia. There you go. Giddy up, kids. Take the dough from wherever they want to give it to you. Any way they want to do it. It's all fine. Thank you all so much. Let's see. What else is going on here? Charlie, my cell phone battery is dying. Listening while finishing up my day at work. Have a great weekend, everybody. And thanks for the afternoon show, Uncle Bruce. Charlie, neat. Way to go, Charlie. Thanks, buddy. Keeping the drive alive, everybody. Welcome to the Party Pals. Glad you're all here with us today. Thank you very, very much. It's nice to see you. And like I say, I just want you to get richer. Nothing personal. I just want you guys to get richer. Take the classes and multiply. $200 a class. Learn how to write options and take in thousands of dollars like these folks on each time you write bunches of contracts, taking in thousands and thousands of dollars from these SAPs. You're learning how to do it through my lessons, hanging out here, become a Gold Bagel member and thrive. Just thrive and survive. Unless you just want to be someone that hopes to win the lottery and you buy one stock for 20 cents, it goes to $20. Oh, God bless you. I hope it happens. But in the meantime, people got bills. There are people here who are paying bills, saying goodbye to their day jobs, replacing those once every 2-week paychecks with option premium on a consistent basis. They've changed their lives. There are people here who are traveling the world, writing options everywhere on the planet, saying hi to us here all the time from all over the place. And when they get back home, they have more money in their bank than when they left. And they've been on a trip the whole time. Welcome to their party, everybody. Yes, indeed. The nights of NEAT are upon us. Deep value, someone said, NEAT? Try it out, says dude. Charlie closed my spreads and bought another Jan 2026 SoFi $17 put. Wrote another. Didn't buy, wrote. ALA is here. Neat. Deep value. Dude, the man. I showed my brother my account. I showed him my account, and he's going, there you go. Giddy up, kids. It gets real juicy real fast, and it compounds. And that's where it gets real exciting around here. 19 minutes to go. And then we're closed for the weekend. We're done for another week of fun. Let's see what happens. Giddy up, everybody, for being here. 725-point drop on the Dow here. Not much of a recovery going on. We're down 100 on S&P. We're still down 430 on NASDAQ. These markets are not improving very much right now. The man says, it's so much more fun when the market is dropping and everyone's afraid. It's so much more fun when everyone panics because that's when they really give it away. It's unbelievable. Oh, savage. I have to say the first 100,000 was the hardest to make around here. The first 100,000 was the hardest, but after that, it's easy. There you go. Cheers, everybody. Welcome to the party, pal. So good. So darn good. I love it when my viewers make money. I just love it. It's just so easy. They're just handing it to you in bucket loads. Unbelievable. Welcome all to the party. Welcome all to the afternoon show here. We're doing a little final hour of trading today just to kind of watch and see what happens and to compare notes and share some advice to you, throw some ideas your way, get you thinking about what you might want to be doing and how to do what you're doing. Did you answer my afternoon poll question? I've got that one going on this afternoon, and I've got thumbs ups going, 67 so far. Thank you, everybody, for the thumbs ups. We've got 169 votes are in the bin here. The market's going lower before it gets any better. That's the question. Yes or no is the answer. 76% say, yeah, it's going lower before it gets better. That's the story. Okay, there you have it. I got to give thumbs ups to Deep Value of the Options. Thank you for that donation here for $19.99. Appreciate it. Got a little bit of Donut Man money working for us in Glendora tomorrow. So if you're in Los Angeles, if you're in downtown LA tomorrow, just around, around lunchtime or so, give or take, Jen and I will be at Philippe's home of the double-dipped French roll, a roast beef pork sandwich across the street from Union Station in downtown LA. What's that? She just does a single dip. I do a double dip. You're welcome to pop by and have one of those with us. I'd love to see you. You can say hi to us. Make sure you buy one of those hot mustard containers to take home with you for your own sandwiches. But if you're not down in downtown LA tomorrow, if you're going to be in Glendora tomorrow, sometime in the afternoon, we're going to be in Glendora picking up some donuts from the Donut Man. Just look it up on Google. You'll find them. I think that's going to be a good thing. We're going to be grabbing at least a dozen of those to take with us so that we survive the harsh winter of the desert. Absolutely. Oh, so much fun. Where do I go, Clay, where do I go to learn about your classes? Where do I go? What do I do, Bruce? Help me out. Go here. stockmarkerswithbruce.ca. Just go there. Just the stockmarkerswithbruce.ca. You'll find everything you need to know. And you'll find the classes there. Start with number 1, then number 2, number 3. Get to work. You can take probably, depending on your schedules, but you folks, most of you could probably watch 3 classes a week comfortably. You can watch them as many times as you want, obviously, but if you can take 3 classes a week, in a month from now, you'll have done 12 of the 18. Within 2 months, you've got them all done, and you are already writing options. You will be, my opinion, most likely bringing in more money on option premium than it's costing you to take the classes. Earn while you learn. You can't do that in college, not in real life, man. I tell you, Clay, the man says, Clay, take a look down below in Bruce's description. All the class titles are listed there. You see them all there. They're just in the description down below. You know where it says see more? Hit that little button and you'll see an entire list of all the stuff. Anyway, Savage of Wall Street, I think it's fascinating that I make more money on days that I don't work. Laughing out loud. I make more money when I don't go to work. The man, Clay, the wheel strategy is pretty safe. Way to write options with a pretty low risk. Tom, lasagna's done. Costco, sorry, Luca. The man, Clay, it is nice, safe way to learn. Hot Wing Mike, I went from $32,000 in credit card debt due to a major surgery and not working for 14 months, and I drained all of my accounts to now having a $100,000 trading account in 4 years. RRSP I had forever though. So there you go. Right on, Hot Wing Mike. Way to go, pal. Louis just rolled down March 28th SoFi cash kit puts from 17 to 16, and they gave me an extra $4,700. There you go, Louis. You're taking the dough. Now you're going to get interest on that dough, or you're paying off 2% a month interest charges on a credit card. That's $94 a month you're not paying anymore. Up to you where this money goes, how it goes, how you build it. It's awesome. We're down to 14 minutes until we shut down for the day on this market. We're still not recovering. We're down 769 points, 772. We're down 106 on S&P, down 450 NASDAQ, still falling off. Down $2.30 a barrel on oil. We're down to $70.27 right now. There it is. Market is backing off. Crazy, crazy, crazy. Wild and, well, wacky is what I say. Welcome to the party, pals. Thank you for joining us from wherever you are. It's great to have you all with us today. Let me take a look at something here. I just saw a headline. I want to grab this if I can. Can I get this to work? Let's see. Here we go. Fugitive advisor and ex-CNBC pundit pleads guilty to multi-million-dollar fraud. James McDonald raised millions of dollars from investors that he used for personal expenses and Ponzi-like payments. A long-time saga involving a prominent financial advisor who became a fugitive has come to an end, with James McDonald entering a guilty plea to 1 count of securities fraud, a felony that carries a maximum sentence of 20 years in prison. Throughout the chaos of 2020, McDonald repeatedly and publicly forecast a dramatic fall in the U.S. stock market and positioned his clients to cash in on the expected crash through what prosecutors described as a risky short strategy. McDonald, 53, a Harvard graduate and frequent CNBC pundit, was predicting at least as late as Jan 21 that the Dow Jones Industrial would drop to 15,000, arguing that the effects of the pandemic shutdown hadn't been fully realized and predicting that the vaccine rollout would happen more slowly than most were predicting. At the time, the blue chip market was at 30,000 plus. The crash never happened like he called, and clients of his advisory firm, Los Angeles-based Hercules Investments, lost between $30 and $40 million, according to prosecutors. By December 2020, McDonald was fielding client complaints about the losses. Very interesting. What can I say? Another one of these guys, unbelievable. There were and have been on a number of social platforms back in 21. There were a bunch of guys on YouTube and other platforms doing what we like to refer to as pump and dump schemes, where they were promoting, buy this stock, watch it go to the end of the earth. This is going to the moon. This is going to the moon. They were recommending all kinds of stocks. and they were buying and selling them at the same time, and they were at times against their clients. As their clients were going in, they were getting out. A whole bunch of those channels got eviscerated, eliminated, and they're under prosecution threats right now. I don't know where some of these guys are or what's happening to them. I have no idea. But as you know, if you're here, I don't buy and sell stock. I'm a YouTuber, and I just tell you what I think is going on. I'm giving you my opinion, and I'm telling you on option writing, there's money in them there hills, and you're taking it, and that's the way it should be. Giddy up, everybody. Welcome all. Savage of Wall Street, this is awesome to hear. Hot Wing Mike, that is quite the life hack. This is quite the life hack. Welcome to the party, pal. Louis, sorry, we have no covered call. We have no credit card debt, Bruce. No, that money's ours. Tom, Quiver Quantitative tracks all politicians trade at a high level for anyone who's interested. Savage of Wall Street, oh no, down 700 points. Wow, out of 45,000, LOL, Luthenberger, but thank you for the free money, you poor saps. Hot Wing Mike, the interest payment was $800 a month, laugh out loud. I had to spread my wings out over the entire week instead of swimming in them now. Charlie, I'm sorry, Bruce, I wrote, I'll get it right one of these days, laughing out loud. I'm not buying cash tickets, Bruce. I'm writing them. That's right, Bruce. I'm writing them. Savage of Wall Street, it's always the Harvard grads that commit the grimmest white-collar crimes. Isn't it amazing? Some of these really smart guys from really high-end schools are crooks. It's amazing. You can't make money the old-fashioned way. Work and grind and learn and one trade at a time, but hey, just, I don't know. Welcome everyone to the show. We have 9 minutes to go until we shut the day down today. Down 750 on the Dow Jones. We're SoFi's 1465 down 91, 8 STS down 284, Rocket Lab down $1.49. GameStop is only down 57 cents. It's actually punching back a little bit right now. AI off 136. Super Microcomputer down 279 at 56.48. Nvidia down 540 a share to 134.72. Tesla down 18.55. Spiders are down $10 at 632 cents. Those were 613 2 days ago. Now 600. Qs down 1081. Palantir off 532 a share. MicroStrategy down $21.23 to 302.69. Costco down 32 cents, coming back on. Coinbase down $20. Matterport off 9 cents. Smart Rent down 8. ME up down 30 cents. Pardon me. Google is down 5.33. Apple's holding a 13-cent gain. Got that new phone out there. Broadcom is down 8.12 a share. Microsoft down 7.26. Intel down $1.03. Netflix down 23.50. Meta, Facebook down 11.97. Call credit spreads. All of these call credit spreads. EI Lilly up $2. Amazon down 6.91. Uber down 2.08. Adobe down 10.92. Cisco down 70 cents. AMD down $3. Unity up 46 cents. Enphase down 151. Spire down 59 cents at 11.07. Moderna up 148. Pfizer up 51. IBM down $3. HBQ up 7 cents. Home Depot down $10. Vanik down 750. Goldman Sachs down 1620. Boeing down 340. Target down 355. JP Morgan down 268. Walmart down another 239. Disney down 188. American Airlines down 64. DraftKings down 378. AMC down at 5 cents. Royal Caribbean down 943 to $234 a share after hitting all-time highs of 277 just a little while ago. 277 probably last week, the week before. Royal Caribbean was at all-time highs just a week or so ago. It's now 234. It's given up $43 in days. There you go. That's what can happen when a market is overpriced. What can I say? Kravis Savage. Okay, folks, I got to make lunch now. It's been grand catching up and reading what options everyone else is trading. Definitely gives me insight on different perspectives. Thank you, Uncle Bruce. Have a great weekend. Thank you, Savage. You have a good time with that family of yours. Not a lurker anymore. Hello and welcome. FS, I bought 100 Flute shares at 201 USD and kept writing calls. The premium was 2,000 US dollars so far, but the stock got higher than my strike price. I have a 260 strike call for 16 January. How can I exit the call? Well, you could theoretically buy the call back, sell the stock, and write a cash secured put going onto the other side where you're writing an in-the-money put contract and take the dough off that way. If it wants to keep on going, run it that way. Brian, Uncle Bruce, June 30 cash secured puts on GameStop are going for $7.30. That's pretty sweet, don't you think? Jan 30 cash secured puts going for approximately $10, even better. So the Junes are $7.30, the Januaries are $10 for $30 cash secured puts on GameStop, which is trading at $26.50. So those puts are worth $3.50 book value. Everything above that is premium time, money in your pocket right now, up front. Boy, you write a $30 put contract and get $10 for it right now. You're offering to buy the stock back for $20 a share. Are you comfortable with that kind of a trade? I would be. Wow, that would put $4,000 in your account from $3,000. Not bad. Yeah, very interesting, folks. All kinds of strategies available here. Learn how options work. Take my classes. Go to my website. Pick them up. Start taking them. And if you want to have a one-on-one session with me privately on camera, just the two of us, you and your better half, you want to do it that way, you and your mom and dad, or you and your grandpa, or you and your child, you let me know. We can do one-on-one sessions. Just look me up, send me an email. It's a $500 1-hour session, but usually go longer than an hour. And so I try to give you some money's worth of advice in that time frame, just you and your situation. Send me a private email. Let me know. My email link is down below. It tells you you can find me, and we'll get together at your convenience and try to make you a better option writer. Yes, let's make your portfolio work for you so that you can travel the world at your leisure and write options wherever you go. Doesn't matter. Giddy up, man. We're down 750 on the Dow, 103, 104 on S&P, down 433 on NASDAQ. We have 4 minutes left in the session. There's no big recovery happening in this market. So there you go. We'll see what happens on Monday. Time will tell. Thank you, everyone, for being with us today, and all your kind words of your support. Of course, as always, we are bringing in some thumbs ups here, and we're getting in some answers to the poll question. 79 thumbs ups. Thank you for that. 196 answers for the poll question. I think this market's going lower before it goes higher. 74% say, yeah, I think so, Bruce. Only 26% think the market is going higher in the near future. There you have it. 79 thumbs ups and counting for the afternoon show. Thank you for helping out promote this channel. I appreciate it. Every thumbs up means a lot to us. It helps YouTube promote us to other people. And with the algorithms changing, we need all the help we can get. So yeah, thank you all. I really appreciate it. Welcome to the party. 3 minutes to go. We're down 772 on the Dow. A little bit of a pullback here at the end of the day. Not a rally at all. Very interesting session here, to say the least. Brian is saying, here's a fun scenario. I sold 5 TSLL cash secured puts for $267. They are down a lot. Value is not. 580 expires next week. Assume I get assigned the $500 shares at $23.50. Interesting stuff. Brian, cost basis would be $20.83. You think it would be best to sell those shares and sell more cash secured puts? Yeah, just keep writing. Yeah, if there's a snapback the other way, the puts you write will collapse in price. Thank you very much. Oh, yeah, you get to keep all that money. Lovely. Always from a position of strength from cash. A cash strength position is where you want to be. Definitely. We're down 772, 775 with a couple of minutes left in the session right now as the markets are closing on a weakish kind of note. Not much of any bargain hunting at the end of the session today. Interesting stuff, guys. Here you go. Clay, if you had to guess based on your experience, will the market recover on Monday? Just your opinion. I think over the weekend, there's going to be a lot of fretting going on, a lot of worrying. There might be a lot of people surprised in the next 2 or 3 hours of how badly the market did today after being down yesterday. And a lot of questions are going to be asked about why is this happening and what is causing this. Is this a glitch? Is this just a little profit taking, or is there something more to this? And so Monday morning could be full of all kinds of doubt. There might be a little dead cat bounce rally, an attempted rally. On the other hand, there may not be any attempted rally. There might be a full-blown exit waiting, people lined up to get out. And we have a lousy opening Monday morning. We'll find out. Option writers will just go with the market. That's simple. The man, T minus 1 minute. Goodbye. MPW shares. Hello, more cash. More cash time to make money on Monday. Might have to call in sick to work. I just can't afford to go to work today. I'm ill. I'm sick of not making enough money at work. I need to make money from home. Neat, says Brian. Mirko, hey, Uncle Bruce, long time no see. I hope you're still living the life of a homeless Canadian. All the best to Auntie Jenny and yourself. I heard you were in the desert again, so all must be well. We are doing great. Hope you're doing well yourself. We're in Rancho Mirage, and we're suffering through 79, 80-degree weather right now. The harsh winter is taking its toll. But we will survive. Richard, neat. Mirko, I'm still working the markets here in good old Germany, thanks to all your knowledge. Great to have you here, buddy. Great to hear from you. It's been a while. Just keep getting richer. Absolutely. We're down 748 on the Dow right at the bell. And what can I say? S&P down 104, NASDAQ down 438. Option writers are laughing today. Absolutely laughing. And it must be terrible for you and Jen. Oh, Jen and I were... Kleenex is right here. The tears can be absorbed. It's okay. We'll be fine. We have tissues. We'll survive. We'll make it work. We're going to Philippe's tomorrow and the Donut Man in Glendora here in Los Angeles. We're going to be okay. We'll work our way through it. Thank you all so much for joining me this afternoon on this impromptu final hour of trading today. The final count so far looks like thumbs up's 82. Thank you. Appreciate that. 203 votes now are in on the poll question. 74% of you agree the market might be going lower for a bit yet before it goes higher. So we'll see what's going on. Mirko, have a great weekend, everybody. You too, my friend. BP, thank you. Uncle Bruce, Boeing Tiger. Neat. Don't forget the neat emojis, dude. Uncle Bruce, used the best. Thanks, man. BP, neat. Don't forget the knee emojis. Appreciate all your support. Thank you for your kind words. Thank you for the donations. Got a PayPal donation that snuck in here on me. I didn't notice it. I forgot to mention it. It just popped in here. Thank you to who did that? That was thank you, Juan. Appreciate that donation for PayPal. Thank you for the closing hour support. You got it, man. I'm more than happy to be here in crazy sessions. No questions. I sold 5 contracts today, Uncle Bruce. There you go. That's how you pay for your classes. It's so simple. Brian, that was a painful day. My poor cash secured puts. Have a great weekend. John Anderson, thank you, everybody. VJ, hello, Uncle Bruce. Is it time to write some put credit spreads maybe on Google? No, you don't want to do any put credit spreads. Call credit spreads is all you want to do right now on those magnificent sevens. Well out of the money. Dude, remember what Conan said about pain. I don't know what Conan said about pain. Robert, I'm number 85 on your thumbs ups. They're still coming your way. Thank you, Juan. Neat. Thank you, Juan. Rock and roll, kids. Fantastic. What a session. Never a dull moment. Another day in paradise. What can I say? We'll see you Monday morning. First thing, we'll see how the markets want to start and how you will react. All I can say is just keep taking their money because they're handing it to you. Like you can't believe you can't not take their money. You just gotta go somewhere safe. It might as well go to you. Why keep it in Fort Knox when you can keep the money safe and sound in your account? Thank you, VJ, for your thumbs up today. Thank you, everyone, for helping out. Have a great weekend, everyone. We'll see you here early. Beach Boy, thank you for this late donation here. 30 shekels. Thank you for the late show. Very lucrative day. Giddy up, buddy. Getting richer. Robert, we'll see you Monday morning. Thank you, everybody. Have a great session all. Have a great weekend, everybody. Relax, enjoy. And we'll see you Monday with a review of our Philippe's sandwich and our Donut Man donuts. I promise. Okay, guys. Thanks again. From Calgary, from Rancho Mirage, actually. Goodbye.